Welcome to your next edition of what we call Spotlight. It's our ongoing educational videos. And today we'll be looking at what I call crack and snap and falling off the roof. I'll go over in detail exactly what these are. But before we begin, just want to remind you, as shown in the risk disclosure here, that there's a risk of loss of trading in any market in any time frame. And you can read the whole disclosure at the bottom of this link here if you want to see the whole text. But let's look now at a false breakout to the downside. So I just nicknamed this the crack and snap. It should be a support area tested at least twice. That's what these circled areas are. And if the market breaks under this support, all the buyers here are losing money and they may decide to sell, or equally important, once the support is broken, the bears get become in control of the market because it's under support. And it's important that the market remain under the support level for the bears to remain in control. If there's enough wherewithal by the bulls, or for whatever reason the bears retreat, and the market gets back above this broken support area, it's a potentially positive signal called crack and snap, because the market cracks support and then snap back. And it's potentially a buy signal once the market gets up here, and the target is the recent high, wherever the down move began, and the price that says you're wrong, there's always a price that says you're wrong, would be under the low here. So let's look at an example. And by the way, you see here in this example, it happens to be the composite Nissen candle scanner. We have scanning software that has my favorite candlestick signals, and since it was designed by me, you know they're valid candlestick signals. So here, Nissen candle scanner picked up, let me get back here, a hammer. That's what this little blue arrow is. And so notice this hammer. It's also a crack and snap. See the support zone here? The market broke under it. Once it gets under the lows here, it's up to the bears to keep control. They couldn't keep control. The market got back above the broken support. This is a potential buying opportunity. And the target is the most recent high, which is over here, which coincidentally it just touched. It doesn't mean it's a resistance area, but it did happen to become a resistance area here. So the target was met, and the price that says you're wrong if you do buy on the hammer is under the low of the hammer. Okay. The opposite of a crack and snap is a false breakout to the upside. I call this falling off the roof because the Japanese have an expression that says let him climb the roof, let him or her climb the roof and then take away the ladder. So here there's a resistance level, the market breaks above it. It's important for the bulls to maintain control. They hold above the market, above this old resistance area. Once it gets back below the old resistance area, if it does, it's a bearish signal. So that could be a time to exit long positions, or if you're option trader or say Forex, or it's really easy to short, you could actually think about shorting with a protective stop at the high of the crack and falling off the roof, because the market should not get up there again. And the target is the most recent low, in other words, where the rally began. So here's an example just a couple of weeks ago when I'm doing this video. This is a falling off the roof. Okay, and you can see it's a long-term resistance area, but as long as it's tested twice, here it's tested 1, 2, 3 times, the market poked its head above it here, got back below it. As soon as it got back below it, okay, it's a bearish, short-term bearish signal. If you do sell short here, the stop should be above this high, and your target is the most recent low. Okay, so where the sell-off, where the rally began, in this case a bullish engulfing pattern, so the target was here, which was met. Now notice the target doesn't necessarily mean it's going to stop there, or it's a potential support area, but it gives you a way to set risk reward, because your risk is up here and the reward is over here. So here is an example, and this is the way I really like using these false breakouts, is if we also get an example of a candle signal. So here again we have Nissen candle scanner running, and in this case it picked up a dark cloud cover, and it does this within seconds. You could have 50 markets on there. You could have all the S&P markets on there, and it'll highlight my favorite candle signals. So here is a dark cloud cover, and it's so there's the dark cloud cover, and there's the falling off the roof. So this is just showing it's a dark cloud cover. That's what that was. Resistance tested 1, 2 times. It got above it. it actually, got above it. It closed above it marginally. On this session is when we got the dark cloud cover. So this was the bearish signal as soon as it got under the resistance area, and our target was here, which was met. So for those who want to find out more about the Nissen Candle Scanner, it's a great way to pick up potential reversal signals, especially when combined with Western technicals, or in this case, false breakouts. You can go to this link here, candlecharts.com NCS, which stands for Nissen Candle Scanner, and it has a lot of exciting features. It'll filter for my favorite bullish and bearish candlestick signals. It'll also pull a chart up and also highlight all the key candlestick signals. It's a great way to learn if the way you view candlestick signals are correct or not. But a lot more details on this link. Go to it, special pricing. And of course, as always, if you have any questions or you want more details, you can contact Paul at candlecharts.com. So thanks for joining us in this special edition of Spotlights.